Welcome back. You're watching Indian Open right here on BloombergQuint Live. Asia as a pocket is faring okay for itself this morning, taking cues from the US equity markets as well, which ended on a positive note. Nikkei 225 is up about 1/3%. China, Hang Seng, all of them in the green. Hang Seng up more than 0.5%. And we're doing okay for ourselves too, with the SGX Nifty above 12,100. That's up 0.25%. Yesterday's session was a little bit of a disappointment. Didn't do much. It was actually a very dull day.
Yeah, but maybe a pause before the rally resumes upwards, though I think maybe a lot of it would depend on the clarity that we get on the global trade deal as well, because hitherto it's not been too forthcoming, and a lot of analysis of how if China does everything that Trump has said in the deal, then it would mean some terrific amount of purchases from China's end as well. So I think people are waiting for the fine print on the global front, pending that maybe the world markets also stay quiet. But today, I think we have a support of the US markets doing well too, Devina.
Yeah, and no domestic cues as such to ride on, actually. So we're kind of slimming down on those cues too.
Maybe the GST Council meet, or maybe the run-up to the budget provides us with some
tomorrow,
trading forward.
We'll wait and watch, and we'll get in some comments as well from our guests as they join us in just a few moments. But also, let's take a look at what's been happening in the futures and options space. Navneet is standing by to give us a setup. Navneet, good morning.
Good morning to both of you. Well, the markets halted their three-day gains yesterday. We definitely had a gap-up opening, but that rally got sold into clear signs of profit booking coming in. You had the Nifty futures where unwinding was seen. The open interest fell by about 3%. And one thing to note, the premium was quoting at really higher levels mid of the series, 50-55. So that also came off, telling you intraday there was some unwinding of positions which took place. But talking about Bank Nifty, which in the opening session hit its all-time high levels, that also saw unwinding in trade, though no major change coming with regard to open interest, but the premium too fell for Bank Nifty futures. What's supporting this market around the current levels of 12,050 is the lower volatility index. So 13.4 is once again at 3.5-month low. But yesterday in the second half of the session, you did see more of call riding coming back into the system, as a result of which you had the Nifty PCR falling to levels of 1.4 vis-a-vis the previous session of 1.6. What's the distribution then for this Thursday's expiry? Maximum open interest on the call side is at the 12,001, and on the put side it is at the 12,000 strike. So yesterday the bulls and the bears, they fought for the 12,100 level, and we actually closed below that mark after reclaiming that. Call riding seen at 12,100 and the 12,200, and the put writers of 12,000 strike yesterday ran for cover. Let's see if that level gets some bit of support or not, because your 20 DMAs also play somewhere about 12,000 mark. Very quickly then, in terms of individual stock futures, you had fresh long positions coming in for IGL, which is trading very close to its 52-week high. Tech Mahindra also saw long positions. Of course, the stock will react once again to the analyst meet takeaway. You had M&M Financial, where shorting was seen. It was one of the top F&O losers. And also in terms of TCS, which was your top Nifty gainer yesterday on the futures side, witnessed short covering. On the FI front, of course, there was buying on the cash side. But in terms of index futures, they unwound their long positions and some bit of shorts were created. But unwinding seen across the board for index option, where major unwinding came in the form of call long contracts and also put short contracts. With that, it's back to you guys.
All right, Navneet, thanks very much for that. Mayuresh Joshi, head of equity research at William O'Neill India, is joining us right on the show. Mayuresh, great to have you as always. Let's talk about a few of these names. Yesterday seemed like a very defensive play. Money went back into some of the bigger IT names. But Tech Mahindra had its analyst meet, spoke positively about FY21 being good for the enterprise business. Near-term challenges on the margin front, but they'll be able to overcome that. Do you feel that while still a defensive pocket, it's a good bet to have some proportion of the money allocated to these IT stocks?
Morning, Devina. Morning, Neeraj. Yeah. So yes, I think some portion should get parked in IT stocks, right? For all the concerns that we keep on talking about, how BFSI is faring specifically in the European markets, with a few bankers actually stating that and the management stating that as well. How these spends will probably happen in terms of the corporate spending specifically on the retail and the manufacturing front in the US markets. Excuse me. I think if you take all that into cognizance, and you probably believe that dollar earnings will still hold up for these companies, albeit at a slower pace than what one really expects over the past few quarters. I think they should still form part of your portfolio very, very selectively again. So,
for what weightage? You would give less than 5% weightage to IT cumulatively? 5
to 8 odd percent, even 10% to a certain extent. But I think you can extend that as the quarter goes by. So I think you start with 5, stay put at 5. we're equal-weighted at this point of time, Neeraj, very frankly.
Okay.
But I think as the commentary will indicate, after Q3 results, you're typically entering into weak quarters for the IT sector as a whole. So I think what management's put forth in terms of the overall macro situation and individually for the balance sheets itself, Devini was mentioning the Tech Mahindra.
Yeah, what did you make of it? I was going to ask you about it.
Yeah, so I think, FY21 obviously is something where they're very, very positive about, right? If you look at the past quarter as well, the wins that they've done on the enterprise business, $490 million odd, when you probably talk about the digital wins as well and the telecom wins as well, $1 billion from AT&T. So I think $1.49 billion in terms of order wins from Tech M. I think that was quite significant. She mentioned margins. Yes, margins did take a hit. But they're curtailing on the SG&A expense. There was a wage hike that they needed to take in the quarter gone by. And they're very aspirant in terms of margins coming back to this 14-15% mark. So as I said, I think it's more of hope that a lot of these managements have. Whether the delivery probably happens from numbers is something that will then increase and enthuse confidence to probably take the weightage higher. So I think 5% weightage for IT stocks at this point of time, overbiased on the large cap names at this point of time.
Are you also overbiased? And for how long does one continue to allocate a chunk of their weightage of their portfolio to financials? I know the going is good right now, and that's, you ride the wave. Sure. But at some point, if you were to sit and dissect your portfolio, you don't want to put all your eggs in one basket, right?
No, you don't. But again, I think where the delivery is coming through and where the earnings is coming through, I think the financials have probably held up far better than the rest of the market. Now, within the financials itself, again, the polarization that has probably happened within a few stocks, I think that probably still continues. I think the institution holding in these stocks still remains extremely high. So unless there is a reason to believe that the earnings deterioration probably continues, and if that probably happens, I think that will spread to the larger market as a whole, because financials probably form the backbone for any economy for that matter. So I think a few of these large cap names have held up because of the quality of numbers that they've exhibited. If by any chance, I think there is any deterioration in numbers, I think that entire trickle-down effect will be felt by financials. If that is felt, I think the trickle-down effect in what we expect in terms of transmission and probably lending out to the lesser stressed out sectors, which probably is happening at this point of time, but the sectors like NBFCs, for example, the lower rated corporates, for example, I think that lifeline also probably goes off. So it might create a multiplier effect, and that's where the whole premise is. I think the delivery from an earnings perspective still continues for these large cap financials. Yes, absolutely concentrated portfolio holdings from institutions, from a few HNIs. But I think that's where I think at least the comfort level lies in terms of delivery of earnings. So I think any number that probably disappoints, I think you might have a massive sell-off for these stocks. But till that point of time, I think you very well continue with these stocks.
Yeah, well, and it'll be interesting to see what happens to some of these names going ahead as well. But remember, Mayuresh was talking about Tech Mahindra. In case you were wondering what is it that came out of that analyst meet, let's go across to our research team huddle. Agam will speak about that. And then Nikki will, of course, put some perspective on some of the other stocks that you should monitor in the session today because of the news flow surrounding them. Good morning, both of you. Agam, let's start with Tech Mahindra. We were just talking to Mayuresh about it, and he spoke about how they seem to be bullish in FY21. Right. But what is the larger summation of the analyst meet that they held?
Well, larger summation is about the communications vertical, which is starting to pick up right now. Well, there were a lot of concerns with respect to 5G coming in and the allocation, the delay in allocation of 5G. But, despite that, there has been a really, really slow allocation process with the company starting getting in orders. As far as the communication vertical is concerned, not necessarily to do with 5G, but in the communications vertical itself. So there are large contract wins. That is the takeaway from the Tech Mahindra analyst meet, mainly in communications, which have improved the near-term visibility, which is a positive. Communications, however, the management has said can be volatile considering there is a lot of disruption in the industry. But that said, moving on to the 3-4-3 strategy, they have suggested that is something that is bearing fruit. And, a lot has been spoken about their 3-4-3 strategy in the past as well, something that they have implemented. Well, at this point in time, the management is saying that it's starting to work out. Some concerns with respect to operating margins. In the near term, there could be some headwinds, but in the long term, well, of course, the company is saying that they have plenty of levers in place which will eventually improve margins, even though there may be near-term pressures. On the whole, the company looking quite positively with respect to the communications vertical.
Okay. Well, and that's been communicated effectively, I did say, Agam. Thanks for putting that into perspective. Nikki, what about the other stocks in news today?
Actually, I also am going to start off with IT counter first because NIIT Technologies, that's one counter on the list. The board is going to be considering a buyback on December 23rd. Notably, this stock has been the best performer that we have in the entire 1 year with gains of around more than 31%. If you talk about the equity base right now, it stands at around 1,897 crore. And 25% of that sums up to around 474 crore. That could be the maximum size of buyback that we could be looking at. Equitas Holding, where the parent, it's Equitas Small Finance Bank, which has actually filed a DRHP with SEBI for proposed IPO. The IPO is to the tune of around 550 odd crore, and the promoter, Equitas Holding, would be offering for sale up to 8 crore equity shares. So we'd like to see how does this pan out for them. Shriram Transport Finance, they expect some kind of a negative reaction on that. S&P Global Rating has revised the outlook of this counter to negative from stable. It's expressed concern on the profitability over the asset quality, and also notably this comes at a time when there's a slowdown along in the commercial vehicle space, which has hit the NBFC and their fundraising capability as such. Last on the list, we're looking at Raymond, where the promoter has gone ahead and increased the stake in the company to 9.5% from 4.5% earlier. It's done through a preferential allotment, and as of September 2019 quarter, the stake stood to around 44% for the entire promoter group as such.
Okay, Nikki, thanks so much for putting that into perspective. So, Agam, Nikki, those are the names that you got to monitor in the session today, some of them at least. Mayuresh, we spoke about IT and NIT Tech, etc. is all in focus. We just did a small piece a while back on pharma and how MNC Pharma seems to be having an edge. What explains these kind of valuations that an AstraZeneca, for example, enjoys? 87, 88 times FY21 earnings.
I was just hearing Dharmesh and you discuss that, and it's a brilliant piece that you've covered. So I think the premium valuations is based more on the premise of the delivery of new formulations of products that they can probably introduce into markets like this. And again, the pricing related issues probably are absent for these products that they're probably introducing. The second element obviously remains in terms of their balance sheet dynamics, and as Dharmesh was pointing out, I think the balance sheet are extremely strong. So I think the cash on their balance sheets obviously lends a huge support. And again, they're being very, very aggressive in terms of their overall launches, specifically within the domestic markets itself. The third element, obviously, as you rightly pointed out, Neeraj, is obviously going to be valuations, right? And valuations are on the higher side for all these MNC pharma companies. So I think you stack up the MNC pharma companies and you stack up the domestic companies. The domestic companies are saddled with a lot of issues at hand at this point of time. Pricing related issues, FDA concerns in terms of their plants, what they've got in terms of creating a specialty pipeline as far as their R&D expenditure is concerned, which probably takes a huge hit on their EBITDA margins. So I think MNC pharma companies do have an edge over their domestic peers on all these parameters. So I think on one hand, it's justifiable saying that those valuation multiples probably are probably expected to stay put. But on the other hand, my own sense is that a few of the domestic companies can also do well. So yes, I think companies like an Abbott, Pfizer, I think they can be held on by investors who are probably holding on to.
Darshan is going to be mighty upset with you calling him Dharmesh.
Oh, sorry. Sorry for that.
I was wondering, is the name change happening already?
I was just getting a call from Dharmesh.
Completely understandable these days, but I'm just saying, because it's good to have some humor. Don't we all need that? Just one small follow-up, Mayuresh, and that is the kind of movement that we're seeing in the sugar space the last few days. What's happening here? Is it the stocks following the global sugar prices and higher exports, or is it something else?
I think it's a combination of 2-3 factors at play, Neeraj, at this point of time. So if you probably look at sugar pricing at this point of time, they've obviously moved up a tad bit. When you're talking about the domestic supply which will come through, the expectations largely are it will get curtailed to 25-26. I think those are the figures that ISMA is probably getting out at this point of time. Consumption probably remains the same. The carryover inventory is almost 8 to 9 million tons, which will keep on continuing at 7 to 8 in the next sugar season as well. So it's not that we are going with a deficit in terms of how the sugar season is going to pan out, even even for the next sugar season. I think the only positive factor that I probably see is the ethanol blending that is coming through. So I think three classes is what the government has done, A, B, C, right? So a lot of emphasis was laid on the C heavy and the B heavy molasses. So I think where the blending comes from and the realizations are expected to come from, C heavy 43 rupees a litre, B heavy you're looking at 48, 49 rupees a litre. So a lot of distillery expansions are happening on sugar companies and a lot of cogen plants are also being put through. So that's a completely integrated model. So I think companies which are in possession of sugar processing, the distillery, which is a reasonable amount of chunk which can contribute significantly to EBITDA, and the cogen processes, which probably takes care of the captive needs in terms of power requirements, I think the realization multiple will be multifold for these sugar companies going forward. It's a cycle that one needs to play out with. Time and again, I think it's a known fact for the markets as a whole. So I think the quality names will probably hold out. So I think Balrampur, for example, might hold out in this entire scenario. They're probably looking at realizations to the tune of 33.5 rupees. The cost that they're holding on to their on their inventory on the sugar side is close to 31 odd rupees. There is a shortage in Maharashtra. I think the extra sugar sales quota is going to come from the UP mills. So Balrampur is going to benefit in terms of the inventory that they hold. So they've got a clear advantage of 2.5 rupees that they're making in terms of sugar as a whole. I think there's an entire piece that we can do. I can speak about it. But I think Balrampur probably holds out. So yeah.
All right, that's the sugar space. So we're pretty active in the last few days as well. But let me just get in our technical experts as well. They're joining in right now. Brajesh Bhatia, research head at Deal Money Securities, is here with us. Amit Hirchekar, director at Index Genius Investment Advisors, is here too. I'm going to start off with you, Brajesh. We're looking at a positive start as per what the SGX is suggestive of. Can you tell us what exactly in terms of levels does one need to keep in mind and what kind of trades can one take then?
Morning, Devina. I think market is slightly showing sign of sluggishness in yesterday's session. If you look at the momentum of the Friday session was not carried in yesterday's session, and we have seen that though it was a range bound session, but it was more of the on the negative side. Plus, if I just look at the Nifty futures OI, it has been slightly still sluggish, though markets have been slightly recovered from around 11,300, 400 levels back to around 12,100 levels. But if we just look at the future OI, it's still trending between 140, 148 lakhs of OI on Nifty future side, which is slight of sign of worry for me, because though I won't say that shorts has been added in the system, but we are not witnessing any addition of longs as well in the current momentum. But if I look at the breadth of Nifty 50, apart from Friday session, which was around 40:10, rest of the days in last where market has been trending from around 11,800 to 12,100, we haven't seen that a strong market breadth on the Nifty 50 or even Nifty 500. If you look at the market breadth, it was nearly 1:1 or slightly 2:1 apart from the Friday session. So I think I would take a short bet on Nifty futures around 12,100, 12,120. Keeping a target back to around 12,000 on the downside from trading momentum, or even 11,960. And stop loss for me would be strictly around 12,180 on the upside.
All right. Amit, what's your take on the index?
Well, I would watch out for levels of 12,026, which turns out to be Friday's opening level quite closely. In fact, if Nifty manages to close below 12,026, I think that would confirm a reversal on a daily basis. Already in yesterday's trade, we have seen a dark cloud cover pattern appearing in Nifty spot, so that is giving you a signs of a market turning weak. But as I said, unless we do not break 12,026 on a closing basis, I will not initiate a short positions. For today's trade, my trade on Nifty futures would be opening up short positions only below 12,050 on the futures. Stop loss would be 12,150 and our target is around 11,800. If you see the entire market movement, the rally has been turning quite narrower, and most importantly the market driver, which is the Nifty Consumption Index, that is going through a deep phase of correction. In fact, right now the Nifty Consumption Index is trading near the 200-day exponential moving average. We believe once the level of 4825, which is around 0.7% lower, if that gets broken, we are expecting a major decline in the Nifty consumption stock. So we believe that would be the major trigger for the markets in the near term. If we do not see Nifty consumption index rebounding from current levels, we are heading for a 15% lower, at least in the Nifty consumption related stocks.
All right. Let's talk about a few stocks as well and how we are placed in terms of individual names. Brajesh, let's start off with you.
I would take on one short and one long. With the market, I'm slightly cautious. I will take a short bet first. The short on Torrent Power. So if I look at the stock was holding strong quietly between 275 or 280 on the downside and 305 on the upside. And in yesterday's session, we have seen some correction on the downside. So I would take a short bet on futures within the range of 270 to 273, keeping a target of around 260 on the downside, and stop loss can be placed at 278.70. My second bet is on Tech Mahindra. If you look at the structure, it has broken out of its bullish flag formation on the upside. And if you look at just yesterday's volume, it was nearly 1 month highest volume we have seen in Tech Mahindra. On the long side, if I just look at the bullish volumes, it was around 3 months highest bullish volume in yesterday's session. And if I look at the derivative, we have seen huge longs adding in the Tech Mahindra. So go long at around 770 to 773, keeping a stop loss of 758, which was below the yesterday's low, and look for the target of around 800 on the upside.
And Amit, what are your stocks?
I have a one short as well as one long. My first pick would be going short on Hero MotoCorp futures. Here the rationale is the stock has clearly given a breakdown on long-term basis. Plus, as we said, the Nifty Consumption Index is giving a sign that it could correct further 10% in the near term. Hero MotoCorp, if you see from a positional perspective, major long positions were piled up between 2350 to 2380. Now the stock has been continuously trading below the same. So we are expecting further cut of around 4 to 5% from current levels. So we are suggesting a stop loss of 2365 and short-term target is around 2200. Our second pick would be buy on Power Grid Corporation. We believe the last 1.5 year of trading range in Power Grid has been between the zone of 175 and 220. So we believe right now the stock is trading at the lower end of the trading band. So we are expecting a rebound from current levels. The stop loss we are recommending would be 182 because that turns out to be the support of the hammer which appeared in the previous week. And the short-term target is placed around 197.
Okay. Stay with us, gentlemen, coming right back to you with more stocks, but onto a special segment first. Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, good morning. What's the stock today?
Morning, Devina. So a short call and on Amara Raja batteries, the stock that we need to watch out for. The indicator used over here is the ADX indicator, and like we always do, let's first try and understand what the ADX indicator is and how do you interpret it. The ADX indicator shows you the directional movement of the security as well as the underlying strength within that trend. It basically uses the highs and low of the security's closing price over a period of time in order to ascertain the trend. How do you interpret it? You go short basically whenever there is a crossover between the plus DMI and a minus DMI line, as well as what the ADX reading is. Now coming back to the price chart of Amara Raja batteries, and what we saw especially with yesterday's day of trade is that the stock managed to close down by as much as 2.5%, which was its worst single day fall in over a month, and with that the ADX indicator in the lower panel that has given a negative crossover. So what I mean by the negative crossover is that the minus DMI line, which is the one in red color, that is crossed above the plus DMI line, and the white line, which is the ADX indicator, that too is indicating an indication of the trend being strong, because typically a reading about 20 is a suggestion that there is a significant amount of strength or weakness whenever the crossover takes place. Now this is as far as the action goes on the daily time frame. We saw that big drop of 2.5%, which almost took out the gains of the last 4 to 5 trading sessions. But on the weekly time frame as well, there is suggestion of weakness coming in. So take a look at how the price has moved as well as the RSI in the lower panel. Although the price made a higher high, the RSI remained absolutely flat, and the yellow dotted line over here shows that typically whenever the RSI mark has come around the mark of 60 or managed to breach above it, it has failed to sustain above that mark, and we have seen a steady divergence with the RSI giving a negative divergence and the stock price too giving a correction at the same time. So we are seeing a similar situation over here. 2 out of the last 4 weeks have been big negatives for the stock. So clearly there is pressure on the downside, and at high levels we are seeing weakness coming in. But given the kind of fall that we saw in yesterday's day of trade, ideally a sell on rise kind of a strategy would work well.
Okay. Well, has this worked in the past, Yash?
So there have been 2 out of the last 4 times that the indicator has given a negative call. Over the next 10-day period, the stock has managed to fall anywhere between 3.5% to 4% on a closing basis.
Right. Yash, thanks very much for that. Mayuresh, what do you make out of some of these auto anchors, and what would you do with the battery names, the tire names? Tire companies have actually not done anything. Obviously, you would anticipate the same, but the replacement market also is not supporting them.
That's the missing piece, right? Because I think replacement market was supposed to probably hold out the earnings for them, but I think even the replacement market is probably not holding out for them. So clear pressure from OEM side. You're not getting the traction to offset the losses from the OEM on the replacement side. Input costs, again, they have come off. So I think the margin improvement will be evident in this quarter to be witnessed. But I think the overall leverage that you expect to see with reasonable volumes, top line realizations improving, I think that missing piece will not substantiate into significant bottom line growth. So I think, again, it's better waiting and watching. I think no need of rushing into either tire companies or even the battery makers, for example.
Yeah, it's interesting because while Amara Raja YTD has been flat, Exide is down about 30% and despite it having that added pad of that insurance business as well, which everybody said will only add. So this year, 31% downtake for an Exide. And I think these were the businesses which people believe would be EV onslaught agnostic, because even electric vehicles will require business. So they had no reason to get slaughtered even because of the EVs. But somehow the performance has not been that great. Where the performance has been good, Mayuresh, is a very interesting mid-cap or small-cap name, Safari Industries. It's trading at fresh highs. Now we can, VIP and a lot of this whole talk about how luggage makers would do well, and I can understand VIP doing this, but Safari, in the recent 1 month, has surged to fresh highs again. Do you track this fundamentally?
So I think we used to earlier, but in the current avatar, I think we probably don't track it.
But do you track this space?
Yeah. So I think if you probably look at how air travel is improving multifolds, right, over a period of time, both domestic and international, I think it becomes a proxy play for air travel and the growth thereof. The second element for both these players is the outsourcing that they probably do. So I think the outsourcing element probably reduces a large element of their cost. Now the only equation that they probably need to manage is the forex translation element. But again, if you probably look at the outsourcing element and the expectations again, that they would probably remain far more constant, and if the volumes probably improve for these players, I think the leverage probably keeps on trickling down. So whether it's a VIP or a Safari, the only problem with Safari is the liquidity, because I think liquidity is a huge issue for the stock. No doubt it's done phenomenally well. But again, a large element obviously is how they're probably able to expand the entire piece, right? Because product innovation is extremely critical for players like these. They have introduced backpacks and the other stuff that is required. But I think constant redesigning, re-engineering and all this stuff is probably something which will keep these players in the limelight. So yes, you can probably hold on to these stocks if you probably have them. How the multiplier will come depends on all these factors put together.
I'd heard a very interesting statistic from Sumit Nagar on one of the Alpha Mogul show, that compare the number of backpacks that exist in the country as sold versus the number of bikes that are sold and existing. And usually, I mean, the argument is, the bull argument is that every biker needs a smart-looking backpack as well, and people want a smart backpack now. They don't want a rundown backpack, and therefore the market for backpacks could really expand. Now, it's an argument, may have some merits as well.
I was seeing a video on, and there has been an innovation in backpacks in the US market itself. So the traditional backpack which you carry on your bag, and if you need to carry the stuff, you need to carry the bag in front of you, open the bag up, right? They've got some levers in place which takes the bag up, it comes right in front of you, you open the bag up, you take the stuff that you want, you pull the lever back up, and the bag goes back.
Wow. Yeah, I think we're some time away from that.
On the price point,
but one stock, in fact, in the last dying moments of trade yesterday, that started to spurt up, and so this big sharp move was Godrej Properties. We could just have that on screen and tell you the last 5 minutes, actually, 5 to 7 minutes of trade. The stock just went up on an intraday basis, went to about 945, and then finally, as quickly as it went up, it came back down to about 932. Brijesh, on the charts, Godrej Properties, now where does it stand after seeing an extremely lull phase over the last 2 weeks?
I think if I just look at the property sector as a sector, I think Godrej plays out to be very, very strong. If you look at the realty DLF, is already moving on higher. So I would think second leg of momentum would be a Godrej Properties, and I think at around 930, take a long bet for 1026 on the upside. And for me, 900 would be the key stop loss because previously also we have seen 900 acting a key psychological level, trending at around 895, market taking supports and hiring back to around 1000 levels. I think this time also 895, 900 stands out to be a key support zone, and I think 1026 can be on cards for Godrej Properties.
1026 on Godrej Properties at 932. Amit, a quick word from you on any of these banks now that you would like to talk about, any of the larger private banks, Axis, ICICI, Kotak Mahindra.
Well, I would say from a banking perspective, I would be watching the levels of 31,775 in Bank Nifty quite closely. If that gets broken, probably you can expect a reversal. As per banking is concerned, I think HDFC Bank, the crucial support is placed at 1240. So we'll not short this counter unless we see a closing below that. On the upside, around 1265, 1270 again is quite possible. But if you see from a momentum perspective, since last 1 month, the momentum in the Bank Nifty has been a bit sideways to cautious. So we are not taking any aggressive trade on either side.
15 seconds or less left to go for market pre-open. You've got Asia looking strong, some improvement in both China and Hong Kong, and our markets too have improved, 37 odd points higher on the SGX Nifty. Pre-open there, strong start on the index, but again, wait till these prices consolidate and stabilize. Taking a look at individual stocks then and what's moving thereof. Important to see what Reliance Industries is doing today. This morning, yesterday was one of the key losers in terms of point contributions. Today has moved up. You remember we've got this definitive agreement with BP being signed. Stocks up closer to 0.8%, so leading some support. 48 on Yes Bank, that's up 2.5%, the top gainer on the index. So you can quantify the kind of gains if your top gainer is gaining just about 2% odd. Maruti Suzuki 1.7% higher, Cipla 1.6% higher. Tata Motors, L&T has moved up, Z at 280. You've got Hindalco, HDFC Bank, SBI at 334. Z, I already spoke about that one. Titan is up at 1172 this morning, and some of the metal names, Tata Steel, JSW Steel, are doing okay for them. Gold India is up a 0.25%. A handful of stocks that are there in the red. HDFC Limited for one at 2350. That's down. GAIL is down 1%. Sun Pharma, Power Grid, ONGC. Some of these oil and gas names not doing a whole lot much today. And Ultratech Cement flat to marginally negative. Coming back to the currency, some strength after the last few days, when we'd seen a little bit of weakness when it propelled it towards 71 once again. But today's session, just marginal strength that's coming in there. 4 paise increment, 70.96.
And watch out for the steel names today. SAIL, Tata Steel, JSPL because of the city upgrade, and let's see if there is some reaction thereof. So those are a few names that you should monitor in the session today. They also, in that model portfolio, rotated out a State Bank of India in favor of SBI Life and added HDFC Life as well. So despite the expensive valuations, I think brokerages are going out and logging on to insurance even right now. And we'll get what the top brokerage calls are in just a moment from now. I just want to mark what some of the other stocks might be doing. There's some unnatural downticks on a persistent system. I think this will get corrected. And there's, as Devina said, an unnatural uptick on Bharti Airtel as well. I don't know if that will last. Lastly, Equitas Holdings, the listed entity, 106 rupees, up 3.5%. Remember, Equitas Small Finance Bank has filed the DRHP for the IPO. So this should be an interesting one. We'll talk with Mayuresh about some of the small finance banks as well. But before that, let's get in Yash Upadhyay Johnson with the top brokerage calls for the morning. Yash.
Good morning, Neeraj. So we have Bank of America Merrill Lynch on Maruti Suzuki. Now, not only have they upgraded their recommendation on the stock from neutral to a buy, but they've also hiked the target price from 7,450 to 8,650. Now, what they say in the report is that they expect the earnings downgrade cycle for the company to bottom out by the end of financial year 20, as they expect volume-led pickup by the end of this year and substantially improve their earnings per share over FY21 and FY22 by at least 26% going forward. Now, this is also on the back of expectations that the macroeconomic factors would improve, and the fact that Maruti Suzuki post moving its most of its portfolio to the BS6 emission norms is limited to the risk from the transition that most of the street is fearing in. That apart, it expects that the company is best placed for the recovery in the passenger vehicle space, despite of the weakness that the industry has seen over the last 18 months with respect to production, with respect to demand slowdown as well as production cuts, the company has managed to maintain its market share of over 50% in the passenger vehicle segment, and the retail demand too has slowly and steadily started to inch up, which is a positive sign for the company. Going forward, as far as their earnings is concerned, their second quarter EBITDA hit a 25-quarter low, and going forward with the inventory correction and the necessary steps taken by the OEMs in order to alleviate the stress at the dealer level, they expect the earnings recovery for the company to start from FY21, FY22, and Maruti Suzuki remains their top pick amongst the auto space.
Okay, that's Maruti there, target of 7,450, approaching that right now, 7,155. Marish, we've seen these big auto names and the way they've performed. Now we're seeing some amount of positive data points coming out. Production for Maruti, they've kickstarted it. There've been price hikes. So all things, like the engine is starting to move a little bit. You feel that this could be the start of the next leg?
That's what my belief is, right? So Q3 numbers might not exhibit what we are probably speaking right now, but if there is sustained improvement on a month-on-month basis over the next few quarters, I think the kind of upgrades that you probably see in terms of expected numbers post FY21, right? Because this is going to be a washout here, even Q4. So I think that will start playing out positively for players like this. All players have taken hikes in terms of the transition to BS6. I was reading a few reports where their whole intention, specifically Maruti, of rolling back their diesel vehicles, and competitors still holding on to that. I think they're probably going to roll that back as well. So to a certain extent, price hikes is going to mitigate the kind of cost push that they probably witnessed on their balance sheets. But again, how volumes play out is going to be extremely critical. Maruti has got all the cars across entry points, right? So I think it stays far more stable on those counts. But again, as I've always maintained with these stocks, I think the move has been there for Maruti from lower levels. I don't mind missing out 5, 6, 7, 8% move. Let those numbers come out. Once I get the hang of numbers and I feel confident, along with what the management feel is and the macro situation improving, I think it's better going all out on these stocks at that point.
5,600, I feel, was a steal for Maruti at that point when it did.
But nobody was willing to take it at 5,600.
Actually, it's hindsight, yeah.
Yeah, well, that's interesting. Actually, maybe a trading perspective before we talk about the small finance banks. Brijesh, you want to come in on Maruti, and does it provide a long opportunity?
Yeah, Neeraj, definitely. I guess a couple of weeks I've covered in the Hot Money show the Maruti, and I'm expecting back to around 77, 76.50 on the upside. So even if you look at the recent low of around 68.80 was the around recent low, and if you look at the reversal volumes were very much higher. So I think market is stabilizing around 200 days average, and stock is showing slight of positive momentum. So I'm very much bullish on Maruti. From trading point of view, I'm expecting 76.50, 7700. But if I just look at the 1 year's point of view, 8200 to 8400 can be on cards.
Okay. The other thing is, as I discussed, Marish, that if we can talk about the small finance banks, there are 2 or 3 out there now, and Equitas has filed the DRHP. So Equitas Holdings as a stock is very active too.
Sure.
This pocket has not done as badly as some of the others, smaller names like DCB or Federal Bank have in price performance at least. What do you do here? I mean, what do you like? Why, if anything?
So I keep on liking AU, right? And we've discussed Avas in the past, though not entirely a small finance bank. But AU specifically, I think in terms of delivery of numbers, as you rightly pointed out, I think it's not got affected like the others. So in the past, we've spoken about gold finance companies, for example, when the entire NBFC crisis was looming large. They largely remained unaffected in terms of how the play was. For AU, again, I think the numbers have held out. So I think the assets under management, very, very strong. 6,500 crores, if I'm not mistaken. I think you look at a lot of numbers, so recollection becomes difficult. NIMs and spreads have probably held on. They've contracted a tad bit because the borrowings have probably gone a tad bit higher. The dependence in terms of the mix of borrowing itself, I think is quite diverse for them. The quality of advances they probably do is far more retail centric, which is very, very important in markets like these. The asset quality pressures have not compounded, so they've probably held out. 0.6, if I'm not mistaken, again on the GNPA is around 0.49 on the net NPA side. So I think they've probably held out on all these parameters that one looks at, and then you stack up the valuations, right? So on a book or adjusted book basis, it probably looks far more expensive than what a lot of these mid-cap private banks would. But again, I think the numbers are probably coming through. very, very comfortable with tier 1 ratios as well. So I think there is no issues in terms of disbursements and balance sheet growth. Underwriting standards have obviously improved for all of these players. So I think they probably understood the importance of strong underwriting skills. And they've been doing that over the past few quarters, which is also going to be critical. So yes, I think the valuation stack up probably is on the higher side, but I think AU is something which probably can hold up from an earnings perspective.
Okay. The others, Credit Access Grameen, Spandana Spurti. I mean, these are also great names in their own space. And Spandana Spurti, since it's listed, the kind of response that it got, maybe it does not justify what happened post-listing. But would you like this?
Well, they're good stories, they're great stories, Evin. And if you're probably looking about how the entire play will happen going forward, right? I think these plays will still account if the numbers probably hold true, right? Now, if there is some amount of disruption that probably happens, which doesn't seem to be the case, because what you've gone through the past 4 to 6 quarters, I think that would have got exhibited in terms of some deterioration happening. That has probably not happened. So in my opinion, again, when you've seen a lot of write-offs happen for the banking space as a whole, and there has been a partial deterioration in numbers for all these players combined together, but they've not been as bad or worse off than what the larger counterparts have probably done. So I think a lot of gestation has probably happened in terms of the bad assets at play over the past few quarters. So I don't believe that anything will go sour going forward as well. It might turn out that you've probably done some more recognition on the MSME or the microfinance front over the next few quarters, might just create some amount of a deterioration in the book, but that will be very, very marginal. So I think great stories. I think all these stories might just play out over the next few years as well.
Well, let's wait and watch what happens. By the way, for today's trade, the pre-open session seems to suggest that we'll start off about 0.25% higher for the Nifty and the Bank Nifty, about 1/3%. We are minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Reliance Industries has signed a joint venture with British Petroleum to expand its fuel retail network and aviation fuel stations.
Equitas Small Finance Bank files its draft red herring prospectus with SEBI for its proposed IPO.
In an analyst meet, Tech Mahindra says the acceleration in the telecom business may continue. Also says its 3-4-3 strategy is paying off.
NIT Technologies will consider proposal for a share buyback on 23rd December.
S&P has downgraded Shriram Transport's outlook to negative from stable due to increased risk of deterioration in asset quality.
And lastly, Raymond's promoter JK Investo increased its stake in the company to 9.5% from 4.6% via a preferential allotment.
Amit Harchekar, can you look up the charts and positions of Shriram Transport Finances and tell us if there is a short trade that can be taken here, or maybe a long trade if you're bullish there?
Well, my sense is we are stuck in that range of 1184 on the higher side, and on the downside 1050 turns out to be crucial support. So the short trade has to be taken only below 1050. Stop loss thereafter would be 1120, and thereafter the target would be 900. But as I said, as long as it's between the range of 1050 to 1184, I think it's into no trading zone.
Okay. Shriram Transport Finance, any major implications of this downgrade to ratings?
It might play out on the stock for today's trade, but then again, as we've always seen in the past, right, it will come back to fundamentals.
Somehow this stock tends to bounce back no matter what happens to it, right?
Exactly. So I think it might be a day's reaction, but then it will come back to fundamentals and everybody will start speaking about how FY21 is looking and how the recovery will be. So I think it's more about recovery of numbers and estimates thereof. So I think as history suggests, maybe I think it's a one-day move on the downside for the stock.
The other one is BF Utilities, and after days of gains, the stock has finally started to see a turnaround in terms of some profit taking. Last few days have not been particularly that great for BF Utilities.
But about time, right, Devina? I don't think too many people know what's the business that BF Utilities is in right now. They have this perennial land bank.
Exactly why I was going to ask that question to Brijesh. From a purely trading standpoint, whether or not there is any sort of a trade possible here, or does one anticipate a further downside, Brijesh, on BF Utilities?
From trading side, I would look for a short trade on the BF because we have seen clear rejections from higher levels, and I think back to around 300 can be expected on BF and one can look for short around 330 to 345 range, 330 to 335, keeping a stop loss of 345 and look for 300 on the downside.
Well, okay. And as we look at the pre-open session, by the way, and just before we thank Mayuresh, as we look at the pre-open session, not too many stocks on the upside. The sketchy names, Reliance Infra, Diwan Housing, MTNL, DB Realty, JBF, are the ones which are moving up. Baban Offshore, for example, Quality. The only one which is having a meaningful move is Equitas Holdings, which you already spoken about. Mayuresh, one pocket that is looking, actually we just have 20 seconds, maybe. Mayuresh, very quickly, 20 seconds, just the name, not the rationale, that one pocket that you're looking out for.
Mid-cap financials.
You are looking out at mid-cap financials. Okay, and I think we discussed some of those names as well. So, but Mayuresh, take a moment to thank you for joining me today. Really appreciate your time.
Yeah, thanks.
Well, that's the view from Mayuresh Joshi of William O'Neill. Last 1 minute left for the markets to kickstart trade. So let's take in the top call from our experts. Amit Harchekar, I'll come to you first. Your top call for the day today.
Well, I would short Indigo at these levels. Stock has broken a major support at 13.55. Plus, we are expecting crude to cross $70 on Brent side. So our target would be around 12.35 on Indigo futures, and stop loss we are suggesting would be 13.50.
Brijesh, what's going to be your top call this morning?
I would go long on IGL because stock is opening at around 421, 422 turns out to be a neckline breakout of bullish head and shoulder, and look for target of around 444 on the upside. Stop loss can be placed at 409.
Okay, gentlemen, we'll leave it at that. Thank you so much for taking the time out, Amit as well as Brijesh, for joining in today and giving us your perspectives. Appreciate your time. 12 seconds left for the markets to kickstart trade. We'll have a start in the green for sure. About 1/3% for the Nifty Bank, about 1/4% for the Nifty. The question is, can we build on from there and can specific names gain? But here's the first rates. Will come up on your screen. Yep, about 1/3% for the Nifty. So about 38 points for the Nifty 50, 1/3%. Sensex 125 points, again 0.33%. And the Nifty Bank to about 150 odd points. So not a bad start for the trading day today. The mid cap and the small cap indices will come up on your screen as well. And well, should have a start which is marginally in the green. Yeah, 0.2%. So not a bad start really for the mid cap and the small cap indices too. Let's get the heat map up on the screen and show you what's moving and what's not. Firstly, a lot of green, very little red. Tata Steel, Vedanta are amongst the names which are up. Remember, I think there is a tactical uptick one of the large brokerages on some of the steel names. So do watch out for them. The reaction could be because of that. Cipla has some gains. Tata Motors has some gains today. Maruti, a big upgrade that has come in from Bank of America, and that stock is up about 1%. Kotak Bank up 1%. I think there's a tactical buy from Morgan Stanley, and that stock is reacting. So almost everything that is moving today has some brokerage element to it, and therefore interesting to monitor them. GAIL has corrected about 1%, NTPC about 0.7%, Sun Pharma down about 0.5%, HDFC down about 0.5%. So not too much moving on the index, but for some recommendations that have come in really. No big news makers in that sense. What about the broader end of the spectrum? Companies which were trading close to fresh highs in trade yesterday. Let's see how they are doing today. The likes of Phoenix Mills, AstraZeneca, Safari Industries. Phoenix starts off about 1.5% lower, but it tends to pick up in the latter half of trade. Remember, that's the trading pattern on Phoenix. The other two start off marginally higher. What about some of the small finance bank related stocks which are in focus today? And all of them have been very active. Ujjivan Small Finance Bank was up about 12% yesterday, up another 2.5% in session today, 59.80 for this one. Equitas Holdings, this is the holding company which is filed for the IPO of the Equitas Small Finance Banks, up about 2%, and AU Small Finance Bank too, about 1/4% higher. Devina, what are you spotting?
Well, starting off with some gainers then, and the top list has a few penny names, penny stocks like DB Realty, which is up 4%, JBF Industries, which is up 4.5%, Reliance Infra is up about 5% today. Then you've got Baban Offshore at 27. MTNL has moved up in trade this morning. So some activity there on a few of these names. Coming down to a few other names, the Godrej Properties. I want to see how that stock's opened up for trade after yesterday's move. The stock's up another 0.5%, so 337 in today's session. Then you've got MMTC doing okay, Equitas Holdings is doing okay, NIT Tech 2% higher on that one. Kolte Patil has moved up. Tata Coffee at 94, that's doing well. Bosch is up as well, 1.5% for that one. Shrey Intra is up 1.8%. Coming down to the losers, BGR Energy is down. Saw one massive move yesterday, giving back in today's session. Magma FinCorp is giving back. had had a smooth run the last few days. Whirlpool is down 3%. Shriram Transport is down. CG Power is down 2%. Apollo Hospitals, Jagran Prakashan, some of these names looking weak this morning. But market breadth still positive. You've got double the number of gainers than losers. So closer to 700 stocks advancing versus about 340 stocks that have declined. Pramod Gubbi, founder at Marcellus Investment Managers, he's joining us this morning. Pramod, great to have you on the show. Let's talk about the mood of the market. It's the end of the year, the calendar year. So far, it's been quite a turbulent ride this year, but it looks like things are stabilizing. We're still looking outwards for cues in terms of the trade talks and what happens there. Internally, the next big event is the budget. So in lieu of all these factors, how does one position themselves?
Well, I think in the short term, clearly liquidity and sentiment are the key drivers for markets. And I think both these factors are clearly showing positive signs. Liquidity, there's no reason to believe global liquidity will recede even in 2020. I think we are on a good wicket on that front. Sentiment, I think both locally and globally, we've had some support. I think the Indian finance minister has come up with a slew of announcements. And perhaps and also promise to keep that sort of series of announcements coming through even until the budget. And with the trade talks, I guess we've got that similar support in terms of global sentiment. So short term, everything ticks the box, but eventually, as we all know, markets will converge towards fundamentals. So we'll have to wait and see if the announcements made so far will actually bear fruit on underlying fundamentals, both in terms of economic indicators as well as corporate earnings. So far, both have been quite still on a downward trend. Some of the announcements clearly think will take time, but will eventually play out. But the key among them to watch out for is how the financial system picks up. Because if you were to dissect and diagnose perhaps the most important reason causing the slowdown, it's one after the other in terms of the collapse of the financial system. First, the public sector banks, who have still about 60-65% of the deposit base, but no capital. So you're literally not putting that deposits into use through lending. And then the NBFC crisis of the last 12 to 15 months has only exacerbated the situation of lack of credit or lack of capital provision to the economy, which is the grease that keeps the economy going. We've had some announcements so far. We will need to recapitalize public sector banks, and more importantly, I think we'll need to come up with measures where the financial system has confidence in each other to lend to each other. And whatever we've seen in terms of monetary policy easing from the central bank is transmitted into the financial system, and in corporate India starts getting benefit of those lower rates, start getting the confidence to make fresh investments. So unless that happens, I think we'll continue to be on tenterhooks. We'll continue to remain reliant on sentiment and liquidity to keep the markets going. But we know those can only take us thus far.
Is there a change in your views on a few of the spaces that we would probably have been discussing for months now? So your view on some of those essential consumer names, your view on some of those financials that we discussed, where you were positive, and the stories have somewhat played out as well. Any new themes that you've added in terms of your monitoring scope, where you feel that there could be a possibility of bigger gains from a long-term perspective, or probably these stories have played out, so maybe just take a back seat on them?
Right. No, I mean, for these stories to play out, we'll need to see a structural break in the competitiveness. A short-term slowdown in growth is not enough for us to sort of say that it's played out and book profits. We don't book profits on that basis. Well, growth has slowed down, but has competitiveness weakened for any of these players? I think there's a couple of guys which we are monitoring. Maybe we see some sort of weakening of competitiveness. Other than that, by and large, the sector still remains quite strong in terms of long-term competitiveness. The only new sector I think we'll perhaps look and are looking quite closely is the auto sector. Again, structurally very well positioned, and we have seen across markets, both developed and emerging, it has delivered value for investors across decades. But the harder bit is the cyclicality of it. But then, there's no way we can time it to perfection. In some of these names, we are seeing stock prices at valuations giving a reasonable margin of safety, and that's where we're looking more closely in terms of the new sectors.
Okay.
I have a follow-up. If you have a follow-up, then continue. But
No,
otherwise,
no,
I just wanted to ask Devina, because I remember in their earlier role at Ambit, they were amongst the first ones to identify an Ashok Leyland, for example, when it was in the pits. The stock was in the pits, and they took the brave call of going out there. Now, my question is, I mean, is CV therefore giving you that option of valuation comfort? And two, knowing the philosophy that you have, you would buy a stock if you can reasonably predict with reasonable accuracy the kind of numbers that these companies will show for the next 2-3 years out. Can you do that within the auto space at large, or the CV space in particular, if you can?
Well, I don't think we're at that stage with commercial vehicles just yet. So we're more keen on the two-wheeler space for now, where I think the drivers are slightly different. It's still, there is a consumption angle as opposed to a hardcore investment cycle recovery, which is what will drive commercial vehicles. And then commercial vehicles, you're also restricted for options. Ashok Leyland is perhaps the only pure play commercial vehicle stock to look at. I think it still remains a fantastic company with the commercial vehicles sector has made a lot of money if you can get your timing absolutely right, which is the hardest thing in our job, as you can imagine. But I don't think we're just there yet to see a runaway recovery around the corner in commercial vehicles. But on the other hand, I think two-wheelers will perhaps be an early stage recovery in terms of cyclicality, less volatile in terms of revenue growth and margins. So that's where we are seeing some comfort and some interest building up.
And would the financiers, just wondering, would financiers of two-wheelers also find favor? Because typically ancillaries around that might also gain. Now I can't think of a pure play auto ancillary company which might only be a two-wheeler company. There would be, but I have not looked at them. But financiers would naturally benefit, right? Because, well, two-wheeler financing is arguably a big part of the two-wheeler sales now.
Yes, I mean, and there are some good companies in that space as well, and it's relatively better of the NBFCs given the asset liability mismatch, right? Because two-wheeler loans are typically 2 years on an average as far as duration is concerned, and you can match the liabilities even in today's environment. So that gives you the confidence that both in terms of growth and profitability, you're on a good wicket. So yes, financiers will be a beneficiary. In fact, I think even in this slowdown, two-wheeler financiers have done all right amongst the few NBFCs out there. And there are some auto ancillaries catering to the two-wheeler space, which will also benefit from a recovery. But then, again, we're not saying that the recovery is next quarter or a couple of quarters away. If you take a 3-year, 5-year view, I think current valuations give you that margin of safety and that comfort that whether the recovery is 2 quarters away or 4 quarters away, it's worth start looking at.
Anyways, bet that way, right? You're not looking to bet it down to the last dollar and at the perfect time. You're buying it for the long haul, any which ways.
Absolutely. I mean, at least we don't believe we have that skill set.
I don't think anybody has that, but okay.
So, but at least we try to get comfort from the valuations.
Pramod, the other pocket that you all have spoken extensively about is the diagnostic space. And I think Saurabh had come on earlier on and spoken about Dr. Lal Path Labs and how positive you guys are on that stock. Dynamics may change if there is one more player that comes in, and talks of Reliance entering this space is pretty ripe. So how does that change for the industry? What changes does this bring about for the industry and players like Dr. Lal Path Labs who have been enjoying this kind of position so far?
Well, I think in the short term there could be some sort of disruption, at least from a sentiment and stock price perspective. But I think this sector is, far from being penetrated, and the growth runway is fairly long. Especially if you take into account the large presence of the unorganized space, right? So if you take the national pan-India players and their share, it's hardly anything. So we barely scratch the surface. Clearly, there is space for more, and I'm sure, given the attractiveness of the sector, given the profitability and the return on capital metrics, you will see competitors entering. The question is, are the incumbents or any of the incumbents have built deep enough moats to sustain that competitive threats? And we're quite happy holders of Dr. Lal's, and we reckon there are moats which will sustain its growth and return on capital over several years to come. And even on the growth front, besides the move from unorganized to organized, I think penetration of preventive tests in India is barely picking up, right? So from having to undergo a diagnostic test only when you're sick, to now companies enforcing preventive and periodic tests on employees is just barely scratching the surface. So I think the growth runway is long enough and fast enough to even accommodate another player, another pan-India player, if you take into account both the dynamics of the under-penetration of this sector and the unorganized to organized move.
Okay. The other one, obviously, that I would want to talk to you about is it's a small space, but the activity is there. You do see it in terms of their numbers and what they're doing in terms of focusing on expansion. Exhibitors, you've got PVR, you've got Inox, small space, not too many, but good value creators as such. And with the appetite of the Indian consumer to go and watch movies, even in an economic slowdown, as put by the managements themselves, is something that gives it a bigger runway, right?
Indeed. I think growth-wise, I'm not sure. Leaving OTT aside for a moment as a potential disruptor, I think given the lack of recreation opportunities for Indians, I think movies will remain one of the key areas where Indian families will spend for years to come. The only issue we face while looking at this sector is it's quite capital heavy, right? If you look at the incumbents' cash flows itself, most of the profits go towards expansion of screen capacity and so on. Most of them have barely generated free cash flows. And that's something that we worry, especially when there's something like an OTT lurking around in terms of a disruptor. We don't know how it will pan out. But if you are sitting on large asset base in terms of screen ownership and the demand doesn't come through, remember it can cut quite sharply on the other way around as well. But I think the incumbents have done a decent job in terms of execution and running the ship. So besides this aspect of the capital heaviness of the sector, with question marks on structural demand, I think as a growth opportunity,
do you see any big disruption for this space as such?
Well, not yet. I think theoretically speaking, you can hear anecdotes of how people spend more time on the Netflixes and Amazon Primes of the world, but at the same time, if you want outdoor recreation, it's not like we have a whole host of parks and theme parks and where people can take their kids and family out. The typical outing remains a mall with a movie and a meal to go with it. So that I don't think is going away, even with an OTT coming in.
The 3M, small movie and a meal. Wow, just coined that term. Great. Pramod, thanks so much as always for joining us. It was a pleasure chatting with you, as always.
Thank you.
Well, interesting thoughts there from Pramod Gubbi of Marcellus Investment Managers. Their portfolios continue to do very well. We take a break on the note that the markets are doing reasonably well, to about 0.5% higher. Up next, we talk about the macro concerns for the Indian economy with Pranjal Bhandari of HSBC. And then, get in a consumer business to talk about how the months or how the quarter thus far has been. Dollar Industries, Vinod Kumar Gupta joins in to talk about that.